people joining. Yeah, the one that joined in now, yeah.
How did you try to make it? You would have to click here. That's the balance you have to click that.
Did you see
Means that your August repayment, you paid leave and you have a default charge.
practice session?
Click on it. I think you have access to it. What is it saying? Okay. Yeah, good. Unmute my video too.
Hello. Hello.
Recording in progress.
Hello, everybody. Good afternoon. Thank you for joining us for today's webinar. My name is Untitled Chapter, and I'll be moderating this panel session on digital payment solutions, a key driver for business growth, which will be discussed by top players in the digital payment industry within Africa. Just a little housekeeping before we get started. If you have any questions during the session, please type them in the question box, which I'll bring up during the session, and we will also have time for questions at the end. Now, without any further ado, I'd like to turn the time over to our first set of speakers, CEO and co-founder of CredPal, Fentolu Olaogun. CredPal is a technological infrastructure that offers customers credit through credit cards and point-of-sale financing, popularly recognized as Buy Now, Pay Later, BNPL. Also, Omolara Awoyemi, the founding executive / COO of Boompa. Boompa is a leading intuitive digital commerce infrastructure for sellers of all sizes in Africa. To bring perspective, the first question I'll be asking is for Fentolu. SMEs face a lot of issues like access to business credit, infrastructure deficit, and customer drop-offs. How do you think digital payments can assist business to tackle these challenges? FT, this question is for you.
Hi, Samto. Thank you very much, and thanks to everyone and for joining us today. Yes, so I'll just do a quick introduction of myself, and then I'll go ahead and answer the question. Right, so I'm Fentolu, CEO and co-founder of CredPal, and we offer consumer financing at the point of sale, popularly known as Buy Now, Pay Later. Right. So regards to the answer to your question, and from my experience and the experience of a lot of SMEs, mostly small and medium businesses, it is a huge challenge in terms of access to credit for merchants, right? And this largely comes from the fact that, merchants need to make sales, but then to get inventory, comes at a cost, right? And aside from that, so even accepting payments from their customers and a whole lot of other benefits, that they could get, from the system, it's largely not available for them, right? So, so one thing that digital payments really help to achieve is that, first of all, it allows, these merchants seamlessly collect, payments from customers. And I like what Boompa is doing with regards to that, in the sense that that barrier of entry that usually comes with, you being able to set up a store, set up a payment channel, and all of that work, right? Coming out of a single box, is very important. So the ability for customers, for small or medium businesses to be able to, offer digital payments, all bundled within within the box like bumper is it's quite important. And then going forward to for us at Credit Power, for instance, on top of all of this, we are now able to offer credit to the customers who come. So there's one side of it, of customers not having access to a platform to buy from, but then these customers then want to buy, but then they can't pay at once, right? And the good thing is that for the merchants, it increases their sales, and then the good thing, and this is what I tell most of the merchants I interface with, is the fact that by accepting digital payments and having a very strong digital footprint, you're opening up yourself to other benefits. So for instance, we also offer credit to customers, and a lot of players in the industry offer credit to customers, right? Both SMEs and individual customers, but without adequate transaction history, in terms of making sales digitally, and getting some form of digital history, right? It's hard for providers of credit to give credit to you, right? So even beyond the ease it gives you in terms of being able to sell seamlessly to your customers, you also need to be able to start building, that history and track record to help you access better services, mostly in form of credit, and then the good thing is that, the excuse of, oh, I don't have access to infrastructure to do all these things is really, really, really no longer existent, because there are a lot of players in the field today who offer a wide variety of solutions, like Bumper, to make all of this easy for you. So in summary, for me, right, digital payment solves a lot of problems in a single, in a very simple way, and that's being able to open up both more sales for the SME, and then also other services like credits, down the line for them. Great. Yeah, and then yeah, and for us, beyond us being able to serve the community that we're in, like in Nigeria, right? Beyond that, there's a strong impact value, that this also comes to play, in the sense that SMEs mostly have to almost kind of like struggle in a climate like Africa, to make sales on the instant. So accepting money should not be a part of that struggle, right? And also getting credits on your own side, and also your customer side shouldn't be a part of the struggle. Like a focus should be, how do I offer the best services, the best resources, the best products, and not really focus so much on how do I then accept payment, which digital payment really solves for us. Thank you.
Thank you so much, FT. Faintoli, thank you so much. That was quite insightful. While you were speaking, I saw Omolara joined in. Omolara, thanks for joining in. So the question I asked FT, I would, reiterate and push it to Omolara. I would like her to, put some pointers to it. The question I asked Faintoli was, SMEs face a lot of issues like access to business credit, infrastructure deficit, and customer drop-offs. How do you think digital payments can assist businesses to tackle these challenges? Omolara, I have another question for you, but, I'd like you to just, write on what Faintolu had said. Then I would ask another question to you, Omolara. Omolara, please go ahead.
Okay, thank you, Somto. And yeah, absolute pleasure to be here with you guys. Can you hear me? Somto, can you confirm if you can hear me? Okay, awesome. You're on mute, but I see you move. So I take that as a yes. Okay, great. Yeah, again, thank you for having me. Hi, everybody. It's a real pleasure to share the time with everyone and I would say, to talk about this specific topic, which for me is, something I'm really passionate about, and I've seen this space grow. And anyway, as I was introduced earlier, my name is Omolara, and I am currently the COO at Bumper. And Bumper, basically what we do is we provide digital commerce infrastructure to support businesses of all sizes, basically to be able to manage their business better. Feyintolu did use some, some context that I really like is Bumper, we eliminate that barrier to entry for any merchants who wants to like really start up from, from whatever level. And so with Bumper, you can get a free website for your business. You can send your store link to your customers to buy from you. You can accept payments online, which is the crux of what we're discussing today. Basically, you won't have to like think about setting up like a whole payment infrastructure for yourself because all of this is already pulled into like one app for you. And there's like a ton of benefits that you can also like get from Bumper in general. But basically end-to-end business management for small businesses specifically. Bumper is like a very useful tool for you to, to get started and to manage better. Yeah, and again, like I said earlier, as the COO, the crux of my work really is to help our company be more efficient with our processes. And in the same line, we do the same for merchants. And so this topic regarding digital payments is super important and very dear to me. Again, like I said, I've seen this space evolve specifically in Nigeria and across Africa over the past decade. And I've seen the value that has been created in the ecosystem from, when I say in the ecosystem, like the entire value chain of people that are interacting within the payment space or just like commerce space. For instance, from customers getting more online shopping satisfaction, that's like a huge benefit that digital payment has solved. To also like merchants or sellers becoming more like prosperous, and to also like the payments and financial services companies becoming even more valuable. I remember as of 2016, one of the statistics that came out then that was kind of like headline in Nigeria payment space was given by some notable person within the payment space. His name is Ope Adeoye, if anybody remembers. He did mention some statistic about the number of active debit cards that were in the market. And I remember then he said there was something around 200,000 active debit cards in Nigeria, as opposed to like 97 million internet users at the time. If we fast forward, that was 2016. 5 years, after that, fast forward to 2021, there is, that number has definitely crossed like 100 million in terms of internet users. And it was, around that same time in 2016, I was working at Jumia. And my role then was leading events and partnerships in the company. At that time, almost 5 years of Jumia operations, as of 2016, we were still dealing with more than 70% of all payments processed through cash on delivery. And we were at that point deciding we needed to launch something. We needed to do something that would forcefully shift this market to start, thinking about digitizing payments for both consumers and businesses, that were leveraging the Jumia platform. And we all know how that went down. Jumia Pay was born, and we know where Jumia is today in terms of like the valuation of the company. And it was also around this same time in 2016 that Shola, started working on Paystack, and we started having early talks between Paystack and Jumia, etc. It was also around the same time that Flutterwave started. And again, I'm mentioning these stories just to like take you back to like 2016, 2015, where the country was, where the state of our digital, business was, and where we are as of today. Jumia, Flutterwave, IntoSwitch, Paystack, all of these are huge, valuable companies today, just 5 years down the line, and some of them are even unicorns, right? See, the point is that there are so many deep issues that are impacting our business and economic landscape in, when it comes to businesses in Africa. You've already mentioned some of them, access to credit, infrastructure deficit, customer drop-offs, etc. But the point is really the fact that the basic and underlying factor here is the idea of payments, right? The digitizing payments process, which is like the real enabler to help businesses make payments and receive payments. And there's like a bunch of benefits. Like there's so many reasons that why this is crucial to the success of small businesses or SMEs or even businesses at any level in Nigeria today. One is the fact that you can actually, like, when you have digital payments as part of the core infrastructure of your business, you're actually empowering yourself to capture the shift. And by the shift, I mean, in terms of the mobile penetration, the number of people that are moving from, traditional means of doing things, of doing business and interacting with their world, to more digital means of doing things. So for example, as of today, there is more than 50% of the Nigerian population access the internet via mobile, right, on a daily basis. This number is growing like significantly, like year on year. And that penetration is happening. And as more people use smartphones and get exposure to like the mobile internet world, the more engagement people are having with like social and commerce apps that facilitate commerce, the more their willingness to pay digitally for goods and services, right? So there are tons of like these small businesses or businesses in general that are already like, selling things on Instagram or, Facebook, or leveraging platforms like, Bumper and, platforms like this. You already have to like, you want to get more exposure and you're paying for ads, for example, on Instagram. You're not paying cash for ads, you're paying digitally. And the more people are getting to use this type of platforms that help them to like pay for stuffs, for goods and services, the more, we start to like embrace digital payments. So as a business owner, if you're not positioned or empowered to like accept digital payments in your, in your operations right now, then you're missing out of like a huge chunk of potential buyers that are already shifting across that curve and, moving towards a more cashless society. That's, yeah.
Fantastic, Omolara. As a business owner, if you are not positioned to use digital payments, you're missing out on a huge chunk. Fantastic. Okay, so Omolara, I would like to ask you, one question. This one is going to be for you. Yeah, I heard everything you said and really fantastic. So this question, what do you feel about the ongoing conversation about digital payment space being saturated? Do you think there are more than enough digital payment solutions for businesses in Africa?
Okay. My short answer is absolutely no.
Okay.
My long answer is I believe that the future of fintech, like basically in Africa, will extend beyond even payments, like digital payments. Again, the foundation, right, is digital payments, being able to accept and pay. Like you as a merchant or as a business owner, you can accept payments and then you can make payments, right, in a more digitized version. And like I did mention one benefit before, but there's tons of other benefits as to why digital payments is just super important. And it's the foundation of everything. There's a lot of like business transparency and better money management that you can have in your business, because like the way you streamline your operations, the way you handle your transactions, electronic payments basically helps you to stay organized. And then you have better cash flow management. And you're also able to like forecast, right, for your business. This is also like a crucial point because you can turn your business value around by just people taking you more seriously when you have digital payments infrastructure in place, right? You're also like the ease of doing business, the convenience, the risk, and so many, like in terms of like time savings, for example, and even like customer satisfaction. Those are like so many things that you can access once you start accepting payments. So it's the foundation of I would say like the digital like revolution, or like the digital revolution like that is happening within like the business world in Africa. But I do believe that our future of fintech, or in general, like what our future looks like, extend beyond digital payments into, I would say, more fintech subsectors, like more like insurance tech, agri-tech, data analytics, credit scoring, lending, which is, all of these pieces are starting to like spring up. Buy now, pay later, just like what you guys are doing at CredPal, and lots more that are yet to be, I would say, super established right now. So while there are lots of players currently within the ecosystem, for sure, it's definitely difficult to say that the space is saturated because there are still clear gaps to be covered, right? We still have millions and millions of people that carry the mentality around of cash, right? So there's still like a lot that we need to change in terms of how people think, how we behave, how we respond to like situations, and how we are able to shift people from that traditional thinking to like the more digital way of doing things. So yes, there are lots of players in this space, but there are still clear gaps to be covered. I think additionally is, in general, when you see major innovations happen, the first movers are not necessarily always the winners in this space over like a sustained period of time. And so there's certainly more room for like new players to like enter the scene and to innovate and evolve and, and just change, I would say, like improve and build on the legacy of the foundation that has already been created for by the first set of people that got into this space. So again, that long answer, but my short answer, like I gave you earlier, is I think it's not saturated. I think there's a lot of players for sure, but that's also part of the innovation we need as as a group of people to move us to to the level and the standards that we want to be on a global stage in general.
Fantastic, Omalara. Thank you so much. The short answer, like you said, no. And the long answer, hey, I would want to reiterate. So when you were saying, when you were, talking about agri-tech, insurance tech, fantastic stuff. I don't know if, okay. So I'd like to ask Amarachi. Is Amarachi here? Let me quickly confirm. Oh, okay, fantastic. Okay, I'd like to ask Amarachi, but then again, before I ask her any question, let me just do like a brief introduction of her. Amarachi, a technical product owner at InterSwitch. InterSwitch is an African-oriented technology-driven company focused on the payment ecosystem that helps commerce evolve and business grow. Also, I see Folayemi here. Folayemi Augusto is the co-founder and CEO of TIC Africa. TICS Africa, forgive me. TICS Africa is a self-service ticketing platform for events creators to create, share, and collect payments for live and virtual events. Amarachi, so before I ask you, your question, the question that, for your topic of discussion, I'd like you to just write on what Malara said earlier. Do you think that the digital space is saturated? There are a lot of conversations going on here. Do you feel that, or do you think that the digital space is saturated? Are there enough digital payment solutions for businesses in Africa? Is Amarachi here? Okay. Just hold on a bit.
Thank you, Somtochukwu. Good evening. I'm actually in support of what Omolara said, because the fact that about 95% of the startups funded in H1 this year alone shows that there are more opportunities yet to be fully tapped in the fintech space. So I wouldn't say that the fintech space, the digital payment space is saturated alone, because these businesses are seeing something, and they're seeing more opportunities, because digital payment keeps evolving, and it's going to evolve from where we are now and what we have now. I know we started from cards. Like another one of the reasons why InterSwitch was founded is we wanted to eliminate cash and issue with insecurities. Then with them getting money from I'm sitting on the long queue in the bank, getting money from the bank, and then being robbed on your way home. So we've moved from card. Why card is still king in Nigeria today and West Africa? We are still, other solutions are springing up, from QR to contactless, biometrics. We have wallet systems today, and now itself, I'm even trying to use, people are trying to use this blockchain payment technology to aid cross-border payments. So payment keeps evolving. It's just going to get beyond there. So my concern or worry wouldn't be whether the payment space or the solution we have today is enough for the businesses we have, SMEs we have to work with. My concern mostly, my worry would be, are these businesses or these SMEs ready and willing to even tap into the solutions that we even have currently? Because there are a lot of merchants and SMEs that are still processing payments manually, who haven't really keyed into digital payment, irrespective of the opportunities and the opportunities that are bound and what they could gain from it. So yes, and that's why even us, we at Inters, we should just try to keep innovating to support these businesses. So that's what I would say to support.
Thank you so much, Amarachi. Thank you so much. That was quite insightful. So the question I have for you, please tell us why the digital payment space is important and how the solutions can help tackle the challenges you think SMEs face with processing payments and managing their businesses.
So as overview of digital space in Africa, for North Africa, for instance, government, they have been trying to, because cash is still king in North Africa, right? And based on insecurity and some things that are going on currently, government have been trying to sensitize people in North Africa, businesses and SMEs, to tap into digital payment because of its importance to them and how it's going to help them play in the competitive field. Looking at West Africa too, they will see the likes of M-Pesa and the mobile money is king, and are beginning to see mobile money play actively in e-commerce. So just to answer your question as regards the importance of SMEs, I will just be as regards to the importance of digital payment, right, for SMEs. I would say that one of the most important things SMEs can do for their growth, actually, and increase their bottom line, is to keep digital payment acceptance. We can't overemphasize this, and that's because it also helps you as a business create a competitive field for your products. Damola will also say that for you to even do anything advert, you just need you need to pay digitally, right? So those days where you have to get cash or go all the way to just make payments. So digital payment also help you cut costs on logistics. And it also makes it easier for you to organize and have a seamless cash flows, right? So you have everything in one place, and then your service provider can help you take care of your reporting, right? But the most important thing, and what I'm very passionate about when it comes to how digital payment could tackle issues with SMEs, is access to finance and credit history. Maybe it's because I'm in the lending space today. I manage lending and data business today in Tersuit. But I've seen so lenders come on board and they want to finance SMEs, right? But then if you don't have a credit history, they cannot finance. How do they get your credit history? Is based on transactions you've done. So they do like a treatment average of your transactions to be able to give you funds. And as a business today, if you want to expand, access to funds is very inevitable. You need funds, and you need these finance houses and lenders to grant you funds, right? So that's where credit history. And once you have a credit history, then you can have access to finance. And besides SME loans, if you're accepting digital payments, your customers will not be able to who may not be able to purchase purchase services from you, or would normally walk up to physical stores to get to pay on credit, which of course the merchants cannot really be financing this, right? Because they are here to make money. So these lenders too can also pay for the value on behalf of customers, thereby increasing your bottom line. So if you would, on a regular day, make 100 sales in a day because of value financing, where lenders are financing that value on behalf of these customers real time as you would a regular transaction. Then you're able to increase your bottom line as well as also access funds from these lenders. So beyond other benefits of digital payments, which I must have discussed earlier when I joined in, the one I'm most passionate about is access to finance and increasing your credit worthiness. And I'm sure that even credit card today, what you're doing based on lending, how you lend to these guys, you would also agree with me that credit history is very important to be able to give loans to these guys. Thank you.
Thank you so much, Amarachi. Thank you so much. So I'm going to ask Folayemi the same question I asked you. Folayemi, so, just to, put more perspective, to what Amarachi said, do you mind telling us why do you think the digital space is important, and, how the solution can help tackle these challenges you think SMEs face with processing payments and managing their businesses?
Awesome. Hi, everyone. Thanks for having me here. My name is Folayemi Augusto. I'm the co-founder and CEO of Tix. Tix is an online ticketing platform, and we help event creators simplify operations and drive sales by selling their tickets online. So to answer the question, I think digital payments have really been a godsend for small businesses because on one hand, it makes it easier for customers like myself to part with their money and other people as well. So I don't have to go somewhere to talk to someone or DM someone to pay. I can just go online and quickly pay. And I think the faster it is you collect money from someone, the more likely that person is going to pay. So like with Tix, I'm always trying to optimize how quickly can this transaction happen so they don't have a chance to change their mind and they can buy this ticket or they can make this transaction. So I think that digital payments are very important for businesses to drive revenue for themselves. And I like to think about it even beyond just the payments bit. I think about what like Bumper does or Tix or Flutterwave or Paystack with your stores. It helps you to manage your operations better instead of having to talk to each customer one by one or open your store in the morning and close it in the evening. There's so much they offer you in terms of being able to collect payments. Like you have your store, you can manage your sales, you can manage your dispatch, like on Tix, you can collect information for them, you can see your data. There's so much more like that digital payment tools offer you that you may not be able to get through traditional methods. So that's why I think it's really important for businesses to use things like Tix or Bumper to sell online so that, because they're getting so much more value from it. And then on the consumer end, if like they're paying for something and using a digital payment, if they don't have all the money, they can use like buy now, pay later. But if you're going to a store and it's only 100 naira you have in your hand and it's 200 naira, sorry, you can buy it. So that's it for me.
Yeah, thank you. Thank you so much for letting me. I like the angle you came from. The question I have for you, is this: while the digital payments have made substantial inroad in numbers of countries, the pace of adoption, growth, and penetration has generally been slower than expected. Do you think businesses have a part to play? And if they do, how do you think they can help to drive adoption?
Okay, I want to clarify something. When you say businesses, do you mean the businesses that are using the tools or the businesses like ours that are providing the tools?
Yes, so businesses that are using the tools and also businesses like ours, because then again, it's an ecosystem. If you could answer from the two perspectives.
Okay, I think that's what I wanted to clarify. So I think it's a two-pronged thing. On one hand, for any new payment method, the merchants have to enthusiastically push it before the consumers buy into it, and it has to be more than one place that can accept it. So for example, if I have a card and it's going to take me so much effort to get a card from my bank, and there's only one store I can use it, it may not be very attractive to me. So the more merchants that are accepting POS, for instance, the more value the card has to me as a customer. So that's on one hand. And I think in terms of our own environment, there is a trust thing to it, which I would say like 5 to 10 years ago, the trust that people had in the systems then is a lot higher now. So I think businesses like ours have to continue to do things that can help those businesses build trust in our platforms and showing them why they should use them. So for instance, like if I was trying to sell ticks to somebody, I would try and sell them on all the value propositions that this can offer them, like I was mentioning before, in terms of driving your operation, simplifying your operations, like driving your revenue, reducing the time for people to pay you, if there's cashback opportunities. Instead of just selling it as digital payments, you have to like sell the whole picture to the consumer, because in our market, people tend to be a bit more worried and they like to hold on to their money. So they want the money to come directly into their bank account. They want people to DM to pay. We need to be able to show them that like using digital payment tools can make you more competitive. You can reduce your costs. You can reach a wider market as opposed to just selling locally in Nigeria. You can sell to customers in America, the UK, Hong Kong, wherever they are, and it's increasing your product's reach. If you have digital payment method, you can like integrate with things, platforms like CredPal, so your customers can have the opportunity to buy now or pay later. There's so much more than just selling, than just the payment aspects of it. And I think that's what really convinces like businesses to use digital payments, because if you're just saying, oh, you collect your money easier, they're like, I can collect my money easy into my bank account. What does that mean for me? Yeah, so that's what I think.
Thank you. Thank you so much. Thank you so much for letting me. So I have a question for Feintolu. FT, can you quickly speak, to the role of consumer credit in digital payments?
Yeah, so regarding that, so for okay, sorry, there was technical glitch there. Okay, so consumer credits in itself. So I'm going to speak to this on two sides. First on the consumer side, and then on the merchant side or the retailer side. So on the consumer side, it's if you look at developed countries and you look at developed economies, you see that it's primarily driven largely, like retail space is primarily driven on credits. And the reason for that is simple, right? I'll give an instance. If I'm going to buy a phone that I'm going to be using for the next 12 months or 2 years, right? Or I'm going to live in a house that I'm going to be staying in for the rest of my life, right? Or a car I'll be driving for 2 years. Like, why do I have to pay for it all at once? Because I'm working, I earn monthly income, right? So why do I really have to pay for it at once, right? On that side. The second side too is there's a lot of pressure that comes, from you having to pay in full for everything, right? Because because the value you get from purchases is utilized over a period of time, right? So the same thing should apply for payments too. I should be able to spread out payments to while I enjoy that value from that product. So for on the consumer side, it's a huge pain, especially for us in Africa, Nigeria particularly. Customers are always under pressure to pay for things in full, right? And that in itself is a big problem. Now, the second part of it is most of these customers use cash, right? So it's hard, like Amarachi said, it's hard for CredPal or any lender to approve you for credit when all you do is just spend cash, right? You get money in your bank account and boom, good and withdraw over half of it at the ATM. So in a way, part of what we consider and a lot of our lenders consider is what your spending pattern like. And for you to establish a good spending pattern, you need to pay digitally, right? So if I'm saying you're paying for your cable TV, your utility bills, I'm seeing you purchasing things, from e-commerce stores, other sites, right? I can clearly see a pattern, in your spending, and it's easier for me to explain to you. So on one side, the consumers need to, for the sake of getting access to credit and living their life, embrace digital payment because, like I mentioned, without adequate data coming in from your transactions, right, or credit history as it is, it's hard for lenders to give you money. And without getting credit, you have to pay for things in cash. And trust me, it's a whole lot difficult, for the average African, to have to always pay, for things, in full, right? So on that side, consumer credit in itself, is what solves that problem. And the best part of this is that for the retailer side too, they enjoy, more sales, right? So, and this happens to a lot of our partner merchants where a customer comes in and wants to buy a low quality phone, for instance, but because he can access buy now, pay later, it says, oh, why not just go for a medium or high-end phone, right? That will go better. So the guy thinks of, oh, if I buy this low-end phone in 3 months, it might be giving me issues, getting hot, the screen might be bad or something. But if I go for a middle tier phone or a high-end phone, I'm sure to use this phone for a longer period of time. So in terms of your customer behavior too, merchants enjoy slightly increased sales, right? Because they're offering credit at the point of sale. And if you look at it on digital scale, it's similar to what I mentioned with consumers too. When the lenders to accept digital payment, right? It allows us as lenders to also extend credit to them, right? Because currently today we serve both consumers and merchants on the back end, right? And if all you take cash, right, and I can't see any footprint of your transactions, it's hard for me to gauge your transaction volume to then know what I can provide for you as credit, right? And I really like what Tix is doing too in that regard in terms of, before now, people organizing events, it's hard for anyone organizing to get credit because you're selling your tickets at the gate and they're all paying you cash. So which means that I can't really say certain that, oh, your event is going to sell for 100 million or you're going to get a number of customers coming to the event. But with Tix, it's that, oh, the last event I did, right, you can check the records. I sold 1,000 tickets at 100 naira each, that's 100K, right? So it's easy for you to bank and it's easy for financiers, to on the back end, provide credit for you, right? So on both consumer and the merchant side, consumer credit really drives, that ability for both parties to enjoy better services. Yeah, and to the point, right, for most merchants, you're trying to stock inventory or you're trying to make sales, right? You get paid when you deliver the product. So before you deliver the product and before you go through all that pain, right, it's essential that you have credit to be able to at least, provide that service in the first instance. Because without credit, you can't provide that service, right? So access to credit also increases, a merchant or retailer's ability to buy, maybe buy in bulk so they can get a cheaper price, right? And all of that. So all those market dynamics come into play. And ultimately, if you look at it, on that macro level, right? And I say this, right? What consumer credit does and what buy now pay later does is that beyond it serving the consumers and the merchants, it does one thing. It increases, the entire GMV, the GDP of the country, right? Because now there's more transactions going on across the retail space, right? It means that producers can produce more, people can consume more, and there's more sales, on the merchant side. So in all, you start seeing economies developing, right? Today we all see how the likes of Apple, and the big like Samsung and Co, always keep releasing phones year on year. Trust me, if Nigeria or Africa was their only market, they can't do that. Because how many people can afford to change their phones yearly or change their phones frequently, right? Because of access to credit, it's easy for now to release a new phone every year and guys keep buying it, right? Because you can always pay for these phones, in monthly installments, and it's easy for you to trade in and get a new phone after, right? So in itself, that entire, economic space, where that, the whole country is clamoring for to increase, can really be impacted heavily, with consumer credit. And for us at CredPal, we're doing our best to try and position ourselves so that we can both serve the consumers, the merchants, and then in all increase, the economic landscape too on that side. And the last part really is and I always mention this, is the impact side. We have a device financing products, for instance, where low end and entry level, like very low income earners can actually afford to buy phones. Now, a lot of people made their first digital transactions by buying that phone. But the good thing is that after purchasing that phone and paying in installments, they're then able to make more transactions digitally, right? We encourage them and say, hey, the more you can transact digitally, you can actually increase your financial status. and then ultimately it's easy for you to move more into the bank space and then start accessing credit. But the thing about it is that without that device financing product, which will allow them pay for that phone in monthly installments, they might have never been able to get a phone, which means that they would likely be excluded, from the mainstream financial industry. So in all, right, and I say this, about Africa, there's a huge buzz right now going on about buy now, pay later, consumer credits across the West. You see, in the West, it might be a fad in the West, but in Africa, it's like a basic necessity. Like people cannot buy and have better lives because of this. Like it's not just, oh, I want to buy a new phone and I can pay later for this. Like people in Africa really want these things and they cannot afford to buy it. But with buy now pay later, it changes the entire dynamics. People can then buy and afford a whole lot more than they could actually have gotten with just cash. So for us in Nigeria, and Africa as a whole, buy now pay later consumer credits is not just a wave. It's actually something that will significantly impact, the entire country, positively, and then ultimately, in the next few years, we'll start seeing a whole lot more happening in digital payments, largely driven by consumer credits, like what happens in the West, with credit cards, and buy now pay later. Yeah,
Thank you so much, Fintulu. Thank you so much. Consumer credit is a win-win. I see that there are questions being put in the question slot. I see Damilola Adegbite. Thanks for sending in this question. And I see Omolara had responded, but then again, I'll just read it out so that Omolara can, just give an answer to it. So he's saying, since digital payments, it's one of the essentials for business to stay relevant, what could happen to a business that decides to stick with the traditional means of payment, but markets online? I know Malara has answered, but then again, I'd like her to just, voice it out.
Yeah, thanks, Samto. Absolutely. I think the question in itself kind of like, it's a little contradictory, even if you don't have to think too hard about it, because you're going to be spending money as a business owner, like running ads online and doing things to get your people to come buy from you. But then you don't necessarily have a way to get them to pay you in a way you can know who that customer is, and you can keep them within your ecosystem for a long time. And so basically my response to that is, you stand a chance of not being able to grow your business substantially by just sticking to traditional means of payment. Why? Because what you really need, or what every business needs to succeed, is being able to create that retention. You want your customers to come back to you. And if you cut them off by just accepting cash, you don't have any way of identifying that customer in the future. So you can't remember what that customer bought. You don't know who they are. You have no information about them. And you basically lose that opportunity to increase the lifetime value of what that customer can bring to you. So it's by no means to say you should definitely still, because we are operating an ecosystem where cash is still king, and people are still going to come to you to pay cash. That's okay. The point is, cash should not be you should not project that as that's the only means that you have to accept payments. And that's why we are having this conversation today, is to help you understand, what you stand to lose and what you stand to gain by switching the digital side. To be very honest, you don't really have anything to lose by using digital payments. It actually makes you more efficient. Your processes as a business get better, and you're also able to retain customers. So that's my response to you, Damilola, and I hope that's helpful. And I hope that's also helpful to maybe any other person that has that question at top of their mind. But basically, you don't want to cut your customers off by just accepting cash, and you also want to be able to grow your business substantially. And that's where digital payments, or being able to accept digital payments, comes in for you.
Very well, Omolara. Thank you so much. So I'll be moving to the next set of speaker. But then again, before I do that, if you have any questions, please do not forget, feel free to put it in the question section of Zoom, would pull it up, towards the end. I would ask it to our panelists. Okay, so I'll be moving to Edidiong. Edidiong Wemakbang is the head of marketing at TeamApp, a financial service provider that champions infrastructure such as Monify, which empowers businesses in all sectors to accept payments from customers and offers solutions for businesses to manage their finances. Yeah. So before now, Falayemi had spoke, she spoke on digital payment system, and digital payments and basically what part businesses have to play, so I'm going to ask Edidiong the same question. Let me just go ahead with the question. Why do you think digital payments have made substantial, hold on please, I'm quickly check this. Okay. While digital payment systems have made substantial inroad in a number of countries, the pace of adoption, growth, and penetration has generally been slower than expected. Do you think businesses have a part to play? And if they do, how do you think they can help to drive adoption?
Hi, Somto, how are you?
Hi.
Do I think businesses have a part to play? Certainly. I think when I think of businesses, I think of the guys at the very top, the processors like MasterCards. And one of the reasons adoption is slow, or we can say not as fast as it is because there's still fees. So think of it, cash is free. I walk up to a merchant, I give them 200 Naira, and that's it. So cash is face value. But with digital payment, somebody's paying fees. And sometimes the merchant doesn't want to pay that. And so there's some money that's being lost somewhere. And so when you think about the fact that there are people in the entire ecosystem that could certainly try to reduce their fees. So you see partners like Paystack or ourselves, Monify, try to reduce our fees from time to time. And essentially our take is super low at the end of the day. But the guys like the MasterCards have not reduced their fees in like 15, 20 years. It's the same thing. So I would say that the processors certainly have a part to play in sort of helping the ecosystem grow. But at the same time, I think we need to do better at helping smaller businesses. So when you think of us at TeamApp, we like to say we underserved, and it's why Mofi's major leg of its payment business is virtual accounts. So we introduced virtual accounts because how do you move people from where they were, where it's super high touch, they want cash, to where it's super low trust, they're skeptical about it, which is using cards. We have to find a place in the middle. And so that's why we introduced virtual accounts where you're trying to pay, instead of putting your card, you transfer. So here, there's only one bit of skepticism in there, which is, oh, will the merchants deliver my goods? And not, oh, is my card going to be compromised? And certain things like that. And so for us, it is providing more options like virtual accounts. By looking at more options, there's some options we're looking at money right now, which is allowing merchants collect offline payments. So instead of people paying online, you go to an agent and you actually pay into a virtual account that your merchant owns. And so the point is, how do you even help translate a habit that is already existent? We're high trust, we're high touch, we're low trust. And so how do you help people then move? You have to start from changing a habit, and habits are super difficult, whether it helps you. So think of banking, right? You've been using your bank for years. Your bank might frustrate you, but you stick to your bank because it's a habit. And so that's really how habits are. It's super hard to shift, it's super hard to change. We're still huge on cash. Cash is free. So a merchant is thinking of all of that. And so we have to think of the processors, MasterCard, people like ourselves, the operators in the game. How do you provide services that are sort of and not too far from the habit that already exists in that space? And then just give services. So of course, like CredPal, you guys are then giving buy now, pay later. Credit is huge. I was doing some research sometime though, where people were like, with the underserved, so people in Ikorodu, and we're talking about loans, and they go forbid. And I just think of the stigma in Nigeria as well, where people think getting credit is super, it's stigmatized. It's something you shouldn't do unless you really have to do it, not knowing that it's important to grow an economy. And so it's really just that education bit. So a lot of us have to take it upon ourselves to provide financial literacy to a lot of people, to businesses, individuals. How do you get these people to understand that? And we also think of something, businesses lose money because they can't reconcile. When you collect cash payments, it's difficult to reconcile. When you collect digital payments, it's easier to reconcile. You know, like, this is all of the funds that came in. So everything is like in your face. I really hope we also go to a point where, I know it's going to be difficult, but QR codes and things like that, where you don't even have to. So think of a restaurant, you collect cash and then you translate it into some like system. But then if QR codes were a big thing here, then you wouldn't even have to collect cash at all, and then just tap and pay. Hopefully we get to that point. But for now, it's really about creating the most seamless form of collecting digital payments, the one that already adapts to current behavior. That's really, so we have a part to play, and yeah, that's it. Was I on mute or you're on mute?
Okay, now I'm on mute. Okay. Thank you so much, Adidio. Okay, so the question I have for you, do you think that there is still more to be done to make digital payment systems valuable and attractive for businesses to adopt? You know, can you highlight some of them if, you know?
Oh, so I feel like I spent the other time I highlighted. So first would be reducing the fees, to be honest. It's super difficult for you to convince a person that's low on margins to go and use a service that is taking more money from the monies they don't even have in the first place. And so it's, I guess fintech sort of like going to the MasterCards of this world and saying, guys, we actually need to help and we need to reduce our fees. I was at a conference yesterday where we mentioned the take rate we have on digital, on cards, to a guy in Brazil, and the guy just goes, oh my God, how are you guys making money in Nigeria? It's super low. It's like 0. how many percent, super low compared to how much people make in other countries. So we make this little, but businesses still feel as though this is a lot, because they would have just collected their cash and moved on with their lives. So one is reducing the cost. Two is the entry process. And it's not really our fault, but regulation has to be done. Like, we have to be regulated. And so when you think of businesses who, when it's time to come on, you have a lot of KYC to do. And so a lot of businesses don't have what you need. They're not able to provide all of the compliance materials. And for weeks and months, they're trying to set up their digital payments platform. And they're like, oh my God, you guys haven't responded to me. Oh my God, you guys haven't done this. And you think it's from the operator, but no, it's not. It's just the fact that you cannot be KYC because you haven't provided everything. So just that. And so for us, what we've also done is looked at compliance and said, what are easier ways to even get these guys on board without providing heaven and earth? Like, what are there easier ways? Are there other ways to bring businesses? Because you have businesses like Credpower, you have businesses like a lot of other big businesses that have all of the things they need. So think of how a lot of people are giving credit based on airtime balance. It's also the way you start thinking, like, what's one way to bring businesses on board with maybe not as many papers as you will. You can now open bank accounts and give them a limit, right? You tell people they can't transfer more than 50K. It's the same way we need to look at digital payments, where let's bring you on board with just this and this paper, or you wouldn't be able to transact more than a certain amount. We let the money come in and go find the other things you need, and then you'd be able to withdraw everything. So that's one thing, the entry process. We think of accessibility as well. So how do you give people a lot more options. When you think of how in the past it was just digital, you had to use your card, and you had virtual accounts introduced, it was widening the pool of people that could potentially use your services, because now the people who are skeptical towards putting their cards can transfer. And so that was super important. So we need to constantly think of ways to widen the pool. And then people that don't like bank transfers, what are other ways we can get? So like I mentioned earlier, for us, we're looking at having people make digital payments offline. You go to an agent, the way you pay your bills, why can't you then go to an agent? So you have a lot of people pay their NEPA bills at an agent shop. So you could as well go and pay you're trying to invest in Trove, and you go to an agent and put some money in there. At the agent, you have your account number, you have your profile created, and you just put your money in there. So it's what are ways that are not too far from how we behave, and that we can sort of introduce. So that's one of it. So just think of accessibility, increasing the options for people. What other ways would I think of? I think that's it. I think that's it on my end, yes. But really, super key is just making the sign-up process as seamless as possible, getting people on board. Think of how the Kudas of the world and all of us, you can sign up as quickly as possible. And you have a tier 1 account, fine. Let's do that for businesses as well. Sign up, you can only get in this certain amount while you expand. So they begin to see the benefits while then realizing, oh, I need to get this document so that I can be upgraded and I can do a lot more than I currently do.
Thank you so much, Edith Young. In short, while you were speaking, I was taking notes, reducing the cost, accessibility, entry process, thinking of ways, to widen the scope. Amazing. Thank you so much. Okay, so I see some questions in the question slot. And I see I see our panelists are already answering these questions, but I'm going to ask a few. This one is directed to Ms. Amarachi. It says, do you think it's possible for merchants to get a one-stop shop to receive all the benefits discussed? Amarachi, please.
Sure, it's possible. I know on one hand, some of the panelists like Kamalara has spoken as regards safer payment and how it helps your business operation. On the other hand, I spoke as regards credit facilities. So yes, and that's why currently we have some storefronts, right? We have storefronts from the likes of InterSwitch, Flutterwave, I think Bumper. I'm not too sure yet, Bumper. I think so. They have where you could manage your business operations. You could sign up easily, and you don't really have to stress yourself on compliance. I get access to it immediately. No integration. You don't even need to have anybody that is technically sound for you to be able to get this up and running. At the same time, you also have access to credit, and as the last panelist spoke from Team Apt. Also mentioned about them different means of payment, and like they also pay with transfer, pay with USSD, and you have different other options to make payments. You can also pay with QR. So yes, so storefront would enable you have all these assets besides digitally, because some people will still want to retain their physical stores, right? So then you have POS. So all these things can also help you manage your payment. So yes, it's possible for you to have all in one-stop shop for digital payments. Thank you.
Okay, thank you so much, Amarachi. So I see other questions. This one is from Passion Adi. It says, what stage of growth does a business have to attain before they can introduce digital payments into their businesses? Falayemi, I would like you to answer this question if you do not mind. What stage of growth does a business have to attain before they can introduce this digital payment into their businesses?
Okay, so I agree with the response Lara shared to the question that is as soon as possible. So as soon as you have a bank account, I think you should be able to accept digital payments. You don't have to be advanced and already have registered your business. Even like if you're using Paystack, you can register on Paystack with a personal bank account. If you're using Tix, you can register on Tix with a personal bank account. You don't have to have a registered business to start collecting digital payments. It helps you to formalize and put structures into your business from the very beginning. So it's not like later on you're trying to convert customers from your WhatsApp line to your store and they are not answering, that they still want to order on WhatsApp, for instance, or you want to start collating all your orders in one place. So I think right from the very beginning, it would help you to build structure into your business. And you can also, you can also combine this along with other methods you are using. So it doesn't mean that you're only going to be online.
Thank you. Thank you so much for letting me. So I see that there are so many questions already in the question slot. I'm going to just ask a couple of them, maybe a few of them, and we'll kick off from there. Okay. Nonso Okonkwo is saying, hello, please. Would it be okay to project? Okay, sorry. Let me quickly go to another one. That's fine. Okay. This one says, Wale Olushola says, my question, how does business conduct KYC at the moment? How do they determine the risk appetite, whether a merchant is worthy or not of the credit facility? Omolara, I'd like you to answer this question.
So just to be sure, is this a question from Wally about business conducting KYC? How does business conduct KYC at the moment, and how do they determine the risk appetite, whether a merchant is worthy or not of the credit facility? Oh, okay. I'm definitely not the perfect person to like speak about credit worthiness and stuff like that, but I'm happy to just share some of my insights. The truth is that every business, the way you do your operations, the way you manage your booth, the way you coordinate things that happen within your ecosystem, there are multiple factors that a credit facility or like a lender is usually looking for to facilitate or to make a decision on who is worthy or who is not, right? And maybe actually Feyintolu maybe able to speak to that, because you guys do like buy now, pay later kind of thing. But in general, for instance, some credits givers looking for basic information around is business even registered? Like, do you have registration? Do you have 6 months? Have you been operating for 6 months? What kind of products do you sell, or what kind of services do you render? There's so many factors that could get into a KYC process. They want to see your statement and what that looks like over a specific period. And most credit people that give you facilities, they actually tier you. Okay, entry level, this is basic level. We need this type of basic information, your business registration, your this or that. And that can give you a level of access to some sort of capital. It could be very limited, maybe some ridiculous number, maybe 10,000 or 100,000 or something like that. That may not necessarily be large enough for you to support your business or to get you to where you really want to be. But then that's where moving through the next level of KYC kind of comes in. So basically, there's a bunch of requirements that you have to fill in based on your business and your operations. That credit facilities will basically use to assess how credible or how worthy you should be or you are to be able to access whatever it is that you're requesting from. Yeah, I guess that's what I can say about that. Maybe someone else can chime in general.
Okay, thank you so much, Omolara. This question I would like Feyintolu to answer as well. How does business conduct KYC at the moment, and how do they determine the risk appetite, whether a merchant is worthy or not for a credit facility? Thank you.
Yeah. Yeah, Omara's answered the question very well. So I'm just going to add a few things. So, like you said, really, the first thing you look at is it's kind of like the history in your history, and this will go from your credit history itself, in terms of available maybe before and the payback on time, and then the second part will be transactional history in terms of what's been your volume, and even your collection method is also very important, for the lender, because if you're collecting purely as cash and not digital payment, what happens is that, if, for instance, I'll give an instance, most lenders want to put a direct debit mandate on your account, or want to put some form of maybe a card on file setup, on that account. If you collect cash mostly for your transaction, then all that would fail. So it means that you're going to be less likely to get credits, from that lender. So really, it's about how you run your business mostly, and then second part will be your history, both your credit history and then your transactional history. And then there are also other forms of financing that you could access. One could be inventory financing, or like invoice financing, where you can then approach a lender to finance your inventory, or finance like an invoice, which is a whole lot more secure for the lender. So basically, it's all of these things have to come to play in terms of what I'm using the money for, on that side too. So if it's an inventory finance, or or an invoice finance, then you're more likely to get better limits, because the lender knows exactly what you're going to be doing with that money. But if you're going to just be taking cash from the lender, then you could divert all that money into a party the second day, right? So you're less likely to get a large sum of cash, as a loan, if you don't have a lot of other things like a good history or good transactions. Yeah, so that would be my answer to that.
Thank you very much, Feintolu. Feintolu, I still have a question for you. Feintolu, I still have a question for you. Okay, there's a question here from Samson Olajide. I will just, paraphrase his question. He's saying something about the policies around, asking for PIN numbers, BVN. That why do companies, credit companies still ask for, this, when then again there is always the do not give your PIN out to any company, do not give your BVN out, guard your cards and all that. So I think that's where his question comes from. I had to read it through. So Feintolu,
Yeah.
how would, yes, please.
Yeah, so one thing is that no lender would ask for your PIN. At best, what we see these days are likes of Mono and Okra, who are who are financial aggregators, right? Who would request for that to access your bank transactions. But aside from those things that are very clear in terms of the use of it, like no lender would ask you for your PIN. So please don't give a lender your PIN directly, except it's coming through a secure product. Most of what Okra and Mono offer today in the market. That's one. The second part on your BVN is, as much as you shouldn't give your BVN to just anybody. For you to access a service today, a financial service, particularly opening a new bank account or anything on the financial space, right? You need to give your BVN. So the question is that who are giving your BVN? That's the most important thing. You shouldn't give a fishy or fraudulent company, right? So one thing you have to do is that while you're trying to get credit, you also need to do a bit of research in terms of who you're getting the credit from, right? So that will help you also ensure that you're not giving your details to someone who would utilize it for fraudulent means or any other thing. So on your side as a borrower, ensure that you're working with a reputable lending company, right? On that side, such to ensure that giving them your BVN, will be whole safe. And then the last part is that no one will ask you for your PIN, right? Except like a paystack, for instance, will ask you for a PIN, but that's paystack, right? And not the direct lender asking you to enter your PIN or send your PIN to them.
Thank you,
So
Feintolu.
does that answer?
Yes, that does answer the question. Thank you, Feintolu. Okay, so I have a question for Folayemi. I have a question for Folayemi. Okay, so this question says, how can a 21st century customer, okay, how can a 21st century consumer adapt to these payments innovations without being financially insecure?
So if I understand that correctly, so if I want to buy a t-shirt from a merchant that's on Bumper, I want to buy something online, how can I take advantage of these platforms without being financially insecure? So I think I'll first start with, how do you become like financially included? So you have to probably first get a BVN, get a bank account, so you can access digital payment methods. So if you don't have a BVN, that's the first place I'll start from. Then I'll open a bank account, get a bank card, then be able to transact online. And then if continue to build a history, and then if I need to get credits, go to a platform like CredPal to be able to access credit. So we'll just start from first entering the banking system, and then up to then. After that, it's really up to you, if I understand the question correctly.
Yes, please. Yes, please. Okay. So I see a lot of questions popping in. I have another question. Okay, so this one is for Amarachi by Daniel Oroatu. So he's saying, hi, good evening. My name is Daniel. Okay, my question goes to any of us because, okay, how do digital payments come in for a service providing? Okay, how do digital payments come in for a service providing business? Amarachi, please go ahead. Let's get you unmuted.
Okay, so it's the same thing as you would the regular merchant for service provider. It's just the same way a regular merchant would come in, right? As a service provider, you want to be visible to your clients, to customers. You also want to be able to get you also want to be able to get payment from your customers today. So yes, I think it's just the same thing that I was saying. For you to be visible in terms of working to digital payment, you just have to either use one of the service providers, like the likes of. Okay, but wait, sorry, I think I need to ask a follow-up question. As a service provider, do you mean you want to come in as a fintech or your regular merchant receiving service from your customer? Because if you're speaking from a service provider, that means you're the likes of let's say a fintech or an organization receive payments from customers or aggregate other merchants. Then that means you would need to be partnering with, you need to have a processor or have a PSP, partner with a PSP to do that. But if it's a service provider like a regular merchant, as opposed to selling bag or shoe or e-commerce, you're rendering services like less internet services. You're just a vendor, so that means it's just the same thing will just apply to just either you get either you have a website and then you're receiving payments in any of the services offered by a Paystack or Flutterwave or InterSwitch today, or you don't have a website, you can use any of the storefront, as we said before, offered by InterSwitch or Flutterwave to get started on your digital payment, and you don't even need to have a license. If you're just rendering services, all you just need to do is have an account or have a registered business like the CAC, and you get started. So that's what I would say. But I'll need to understand where you're coming in from the service provider. But yes.
Thank you so much, Amarachi. Okay, so before I go on, I would like to, I see some questions here and I would like to direct it to our COO and co-founder at CredPal, Olufemi Jegede. Okay. So this question was directed to Fentolu, but then again, I'd like Femi, to answer it. The person is on. Okay, that's fine. Person says you said something about business credits. Does CredPal have a payment service that allows somebody to use the business credits? Can you help to shed more light on this?
Yeah. Yeah. Hi, guys. Yeah. Thanks for the question. Absolutely. CredPal has a credit offering for businesses, and the first step to be able to assess that is to become a CredPal merchant. Like we've been saying from the beginning of this conversation, why your business have to embrace data payment. So as of today, you have to be onboarded with CredPal, and you have to use CredPal as a means of payment. You have to accept CredPal as a means of payment for your customers. So basically, you build your transactions with CredPal, and based on that, we can extend credit facility to you. Off the bat, for exceptional businesses who have really good track record, we're going to start you off at a base, something conservative that we think is going to be within a safe threshold. And and as your business scales with CREPA, you get to access more facility. So yes, CREPA provide facility for businesses. And the way to assess that is to become a merchant on CREPA platform.
Okay, so this is another question for FM. Okay, Wale Olushola, he's saying, thanks for that. Okay. He's saying, I guess my question is whether the process is automated or is done manually. For example, a third-party company can be used, which guides the business to make the decision. Oh, okay. I think there's a follow-up question. Okay.
Yeah, the process is automatic. If you head to our website today, you can sign up as a business. Once you sign up, just follow the process, provide all the required documents, and you would get, could take up to 3 days, because of course more due diligence needs to be done here. For customers, it's almost instant, but for businesses, it takes a few days for us to complete our due diligence. But all you have to do is sign up on our website, provide all the required documents, and the rest will be handled for you.
Okay, thank you so much, Femi. So I'm going to ask one more question and we wrap this up. Okay, this question is going to be for Edith Young. The person is anonymous, person saying, thank you for this platform. Please, my question is, how do I ensure that these digital payment services are secure for me and my customers?
Okay, I think that question has been answered already. I think Fentolu spoke to that earlier. The first and most important thing is that data payment solutions are more or less banking solutions, right? Or it's a typical finance solution, and required the standard safety requirements. It's a standard safety requirement such that things like your PIN are very secure. Do not give unauthorized access to your financial record. A lot of time, financial platforms just require just gives you a kind of link or a platform to accept payment. They will not ask you for sensitive information like your bank account details or your PIN and stuff like that, So, but then again, there's a confusion that is going around, which we've experienced times and times over in the finance business, and that's customers being overly protective of the BVN. Yes, to some certain extent, BVN is a very sensitive information, but then quite a number of businesses would also require your BVN. I mean, credible businesses that will require your BVN if you're trying to transact with them. So the first thing you will have to do is do your own due diligence, be sure that you are dealing with a credible entity. And once you trust the entity, then you can more openly part about information like the BVN. But one thing you have to keep secured at all time is access information to your bank account or your banking details. No business will require that from you. Your PIN, your password should be kept secured at all time. And if you follow that, I'm sure you'll be very, very safe. So no business would ask for your PIN or your password or your card details. So stuff like that need to be, kept protected jealously. But other information might be required. So do your due diligence, be sure you're dealing with a credible platform, and also keep your banking details very secure.
Thank you so much, Femi. Thank you so much. Okay, so this next question is for Eddie Young. This is going to be our final question. This question reads, as an online vendor with web shop, how do we include your services to our potential customers?
With the web shop? Is that the question? Okay, as an online vendor.
Yes, online vendor, yes.
Really, okay, all you have to do is speak to the teams. If you want to use Monify or Paystack or whoever, you'd really just need to sign up and you'll get the relevant integrations you have to use. It's usually super easy. You can sign up in one day. Only thing that might take a bit of time are the right to ensure that you are an actual business, but usually it takes a few minutes to set up on most platforms. I think Iwajomo Babatunde, he's the one that asked that question. I think you can always reach out to myself or whoever else, but you can reach out to myself and we'll help you, we'll set you up. And just to respond on, I know you had asked earlier for the person who asked about if digital payments were secure and how to ensure they are secure. I think one other thing you can do is start with first, know that a lot of payment platforms are sort of channels. So the money doesn't exactly sit with them. They're essentially just helping you process and funneling it into like an actual bank account with a traditional bank that a lot of people trust better. And also just know that if you are also scared about your customers, or are they worried, are they worried about compromising their cards, you can look at virtual payment options where they don't have to put their cards anywhere and they are just doing transfers into a certain bank account. So you start from obviously where you are a bit more comfortable with, and you can then go higher and then go deeper into using actual card payments or using things that are, but yes, they're secure. Like Olorunfemi said, they are secure. We have regulations that will essentially send us out of the market if it isn't.
Thank you so much, Eddie Young. Also at CredPal, whether you are an online vendor, you could actually integrate with CredPal. So then again, on your checkout plugins, where customers shop from, you could actually, put CredPal there so that they could click it and purchase whatever item they want to purchase and pay later. So then again, buy now, pay later. So this was a very interesting one. I want to just say a huge thank you to all our speakers who made time out, of their busy schedule to be on this webinar. Thank you so much. And all attendees who joined us for this who joined us for this session, and everyone who asked a question, thank you so much. So if you're a business owner, you've heard it, digital payment solutions are the future of growth, innovation, sales for MSMEs in Africa. Thank you so much, everyone, and do have a good evening.